Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here. Fortunately, we don't have the fire situation down here that you guys are having up there or in California, but I got to keep our fingers crossed, I guess.
Yeah, well, not very many fires burning in BC, but all the smoke from California, Oregon, and Washington has decided to park itself right here on the Vancouver waterfront.
I heard a news report today that said some of that smoke blowed all the way to Europe. Did you see that?
Yes. Yeah, it's finally getting to the east. You know what it means. If it finally gets to Toronto and Washington, D.C., our politicians will finally pay attention to it.
Okay.
That's how it works. In Canada, nothing happens unless it happens in Toronto. And I'm sure in the States, it hasn't really happened unless it affects New York and Washington.
So, always something new, right? So next thing we have to worry about is a tsunami on the West Coast or something like that, or a polar shift, and that'll really get the environmentalists going. I'm sure if we had a polar shift, they would blame global warming, right?
Oh, always. There's always a blame, and frankly, we just have to do a better job of looking after ourselves. Mark, do you still have your special offer for our listeners?
We do, at VRTrader.com. That's Victor Robert, VRTrader.com. We have 50% off for any of the subscriptions that you pull up on the home page, and the promo code that you use when you get to the order form is 2020 half off. 50% off, 2020 half off. Thank you.
Mark, the equity markets, how do you read what's going on there right now?
Well, I'm a bear, and the question is, will my bearishness extend out for the next couple of years, and this will be more than just a short-term bearish call, but my model has said, watch out below. I think the mentality out there is, since we've been so conditioned to believe that you buy the dips, it's going to come back roaring to new highs, that some of that enthusiasm still exists out there. We saw that in trading today, Thursday, when the market's down 300-400 points and manages to rally back a little bit, but still in negative territory. But I think, seasonality this time of the year, the election, our model, says between now and early November, you got to be very cautious or short. Though we do trade. We had some nice trades for those who do that type of thing in our service today, without naming names, but a couple nice little winners there. So we're always looking for some action. There's always something going on. So at the moment, negative on the market.
Now, this was some time ago, but we know Apple, Amazon, Microsoft, the tech stocks have been the darlings so far, but is it dangerous to get into them? And someone said to get your investment back in Amazon, for example, it would take something like 300 years.
That makes sense. It could happen, but I don't have any, particular prediction other than if you want me to look at the stock. Would you like a read on Amazon?
But I'm just saying in general, you have these people piling into these stocks that are already at record highs, and we've always heard the motto, buy low, sell high. What does that say about the people who are investing?
It says that it's probably long term, the market will bail them out. The market over 100 years has continued to move higher despite these big shakeouts like we saw in March, or the one we saw in 2007, 8, 9, and the financial crisis back in 2000, right after 9/11. So they'll probably be okay big picture. We're more focused on the near term. A stock like Amazon, which got all the way up to about $3,600 a share. And our work has risk all the way down to $2,600 a share. So there's some risk there.
What's going on with gold?
I'm not too excited about gold here. I think that the U.S. dollar still has a chance of rallying. I'm a little nervous about it. There was a shakeout in gold here the last day or so. I think that surprised a lot of the bulls. We're keeping a very small position, for one of our services, the metals resource letter, because that is a focus on that sector, and we always like to keep our foot in the door. But for our other trading service, we sold all our gold and precious metal positions out several days ago with a view to repurchase. When I say repurchase, there are some positive cycles toward the end of the year, but as we saw it back in March when the market sold off, gold shares and stocks all sold off together. And if we're correct about a dollar rally or just a normal stock market correction, today when we saw the market sell off, I saw all the gold stocks down. Gold itself was down, but they didn't manage to rally back a little bit. So way extended here. Too much bullish sentiment. I guess I'm not as much of a gold bug as I used to be in years and years past. There's also an old friend of mine passed away, unfortunately, a few years ago, Terry Laundrie. I write about this in my metal resource letter. Very few people know about him, but he created this thing called the magic T. T as in Tom. And way back in 2000, he projected a top in gold in 2020. And, he passed away a few years ago, and I keep this chart in front of me here. And, of course, we did sell off from 2011 down to, 2015, 16, and now we've come back. And it'd be sort of funny that he's really right. And the big high is 2020, whether we've already seen the high or we're about to see a higher high here into the end of the year, early next year. And that would probably be the least expected event among the gold bulls and gold bugs who are, talking about numbers, anywhere from 2,300 U.S. up to 10,000 U.S. So I'm not discounting that could happen or couldn't happen. We follow the charts. We'll trade it accordingly. If we see a breakout, I guess we'll get in there. Hopefully we don't buy breakouts. I try to buy them off pullback. So if I see what I call a volume reversal off of a low in the precious metal shares, ETFs, gold itself here, let's say we do get more of a correction into September, rest of September into October, and we see another buy point, that's where I really rather get in than to chase it into new highs. So let's see what happens, but we'll trade it accordingly, but I'm a bit of a bear on the gold market and gold shares as well.
What's the story with silver?
Same thing, all fall in the same category. They're all in a time frame where you could experience more of a correction, too much bullish sentiment. My volume analysis showed all these negative volume patterns here in the last week or two, showing distribution, selling in the precious metals and in the individual shares. Too much excitement. The excitement really hit a crescendo, as a couple of weeks back when we heard that Warren Buffett, took a position in Barrick Gold, and everybody jumped in figuring, well, he can never be wrong, but you don't know where he's in or at what price, and maybe he already sold and hasn't told anybody. So who knows, but that created a lot of excitement right near the top, by the way. So it's funny how that story came out right near the highs or just about near the highs. So I'm a little bit, my numbers and my cycles say, if you're a long-term investor or whatever that means, I guess if you got 20, 30 year time frame and you're not 75 years old, you could, hold gold and hold stocks and hope they'll eventually come back, which they probably eventually will. But we take a shorter term viewpoint than that. That's why we became number one market timer last year. And if the market crashes here between now and year end, which is a possibility, we may be the number one market timer for 2020 as well. We'll see.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia.
Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mark Leibovit. Mark, in a so-called normal year, September, October, always a scary time in the stock market. Traditionally, is this year any different?
Not really. There is that seasonal pattern. It doesn't always work. It's not 100%, though there are many great glaring instances where it does. So, you got to watch your again, I keep referring to this analogy, and it's probably, I've said it so many times on the interviews. It's like the weatherman, making his forecast. You've got a model, it forecasts out, and then, just before you get on the air with your weather forecast, you should open your window and look at the sky and make sure it all fits, So what I'm saying is you gotta look at your short-term indicators, what's happening short-term, both in the news environment, both in your technical readings, and the big cyclical forecasts have their value, but you got to tie it in with both short-term numbers and cycles as well. So the answer to your question is yes. This year it seems to fit in nicely, and I would expect further weakness ahead, particularly with the upcoming U.S. election.
What's happening with the U.S. dollar?
Sure looks like it's trying to bottom to me. I mean, it comes up for a day or two, and then it sort of falters again. We're long the ETF for the U.S. dollar. It's ticker symbol UUP, and it's up a penny in the aftermarket. I see now it was up nicely during the day, then it sold off a few cents during the day. So it's in this bottoming process. Most analysts are saying that the U.S. dollar is going to crash even lower for all these fundamental reasons, and they might be right. I'm just looking at it from a chart point of view. It sure looks to me like it's trying to forge out some type of trading bottom. So if now this doesn't mean gold can't come down anyway, but it seems that once gold comes down, you see the dollar rallying, and it also seems like the stock market comes down as well when the dollar is rallying. So we always knew for years and years that a weak dollar was good for the stock market, and we thought it was also good for gold, though it doesn't always play out that way. But right now, I'm just watching the pattern. We're long the U.S. dollar, thinking it could bounce more, and if it breaks to new lows, I guess we're wrong. We'll be stopped out, and that probably means gold will take off, and we'll have to jump in and become a bull short term to play for the next wave up, which I still could see coming into the end of the year, particularly after the election. But I'm just betting that you'll have a better buy point here if you're patient in the next few weeks.
We'll have more with Mark Leibovit right after the break.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, the U.S. Fed says it wants to keep interest rates low for the next 5 years, but does the U.S. Fed really control interest rates? Aren't there international forces like the bond market that have a bigger influence?
Well, that's what they tell us, that, the Fed can only do so much. My opinion about the Fed hasn't changed much in the last 20 years, thinking that it should have been abolished a long time ago, and along with the FDA too, and that's a whole other discussion regarding the drug situation out there. But they've done a terrible job of managing the U.S. economy. Alan Greenspan, I used to write about him all the time when he was in there, comparing him to a New York taxi cab driver, where he was slamming on the brake and then slamming on the accelerator back and forth, didn't know which way to take the taxi cab or the interest rates, so to speak, and a very incompetent person, in my opinion, in terms of the job he did at the Fed. He's responsible for a lot of, negative actions, particularly, they attribute the crash in 1987 to Greenspan as well. So I don't know if that's totally true, but he was in charge at that time. In any event, yes, bigger forces are at play with regard to interest rates, but the more important comment is the fact that, in my opinion, they talk about he's going to keep rates down for so many years in the future. So what does that really tell you about what's really going on in the world? It tells me that things are really bad. And at the top of the broadcast, I sort of hinted that, we might be headed into a couple bad years here in the stock market. I know we had a good year this year. The Fed's behind it now. We've got the election. We'll see what happens there. But we could be headed into a couple-year bear market. And the fact that the Fed is telling you they want to keep rates at or near zero for several years out, either they know something that we don't know, or we should realize that that's the case, that there's something really bad coming or is happening, that they have to make that type of comment to encourage us that rates are going to stay down. So frankly, that was an extremely bearish comment, in my opinion, that we're going to keep rates low, almost in perpetuity here. That tells me that I don't want to scare anybody, and I could be wrong, but we may be really headed down in a big, big way in the next couple of years. So let's see how the numbers play out.
Well, as our market historian Bob Hoy, a regular show guest on Fridays, points out, the Fed was invented in 1913, allegedly to keep the economy from sliding into recession. And since then, there have been 19 recessions, if you count this one. Would you say that's a very good job of doing your job?
Not at all. And we also know that since the Fed, I think it was 1913 when it was actually snuck in overnight, some night session I had read somewhere, regarding how they got the bill passed at the time. I don't know if everybody was present at the time when they passed the legislation, but I know the U.S. dollar has lost 97-98% of its value since the Fed was created. So, and it's also, a questionable institution. Many people don't really realize that it's a private corporation. The actual guards out in front of the Federal Reserve are not hired by the federal government. They're private guards. It's actually a private company. The shares of the Federal Reserve are owned by many U.S. banks. They don't talk about that in the initial creation of it. You have to read the history of the Federal Reserve. So the whole institution is questionable, has been questionable from the first day, and people think it's a federal government, U.S. Entity, but really it's a private entity working alongside the federal government. And, the whole thing really is rotten in Denmark, in my opinion. The whole institution, the way things have been managed, and the way it's held into so much reverence and respect is really ridiculous when you get into what the Federal Reserve is all about. So, unfortunately, we're caught in this system. Ultimately, it probably will be abolished. It probably will have to go away at some point because of the bad job it's done over the decades. And we know the central banks around the world have done a terrible job. We see what the European Central Bank has done in recent years. I mean, these guys know as much about predicting the economy or managing interest rates as a kindergarten kid who probably would do a better job. So unfortunately, we're stuck with this system, and we're just playing along with it. But ultimately, the incompetence is going to have its price paid, and it will eventually disappear.
Yes, somebody said to me once, an economist is a person who has never met an average person, but they've had one described to them. Would that be the central banks?
Yeah, well, politicians, you could say that too. Many are not real world people. They've been in politics their whole life. Some have, some haven't. Of course, Donald Trump was an exception because he was a businessman, but the majority of politicians and economists are stuck into their own world. You know, the economists are academia individuals, and then they haven't really held a real job or really have been out in the real world. And again, that could be the case for some politicians as well. So unfortunately, we don't have those type of people running things. So that's why I'm such a big Trump supporter myself, because at least we have a businessman in there who has some real world experience. Not to say he's perfect, but it's a lot better than what we've seen up to this point.
Right now, are there certain sectors that you think are still good to get into?
At the moment, I think you got to be pretty much out of the market. I mean, there are trades, and without getting into specifics, I mean, there's still some action in some of the vaccine-related shares. Everybody's looking for that magic cure to the COVID, which I don't really believe exists. I think the darn thing will probably just disappear on its own, even though it was probably a biological weapon to begin with. But nature has a way of fixing things like that. They don't hold, from what I read, they really don't hold up. In nature has a way of destroying these things because they weren't created naturally. Ultimately, it'll disappear. So there's some play in some of these names as they come out supposedly with some type of, not necessarily a cure, but vaccine, which probably is going to cause more than harm than good, in my opinion. I would never take the vaccine, so I don't know how many else feel that way, but I think it's an imposition on us. In fact, my whole life, I've never taken a flu vaccine of any kind. I'm more into alternate foods and natural things to help protect one body against these type of events. So, but we're getting off on a little bit of a tangent. The solar stocks I still like, but they're coming off of a top here, having had a big runoff. So at some point they're going to be a buy again. The gold shares, in my opinion, if we get a little bit more of a shakeout, will be a buy again for a trade. And many of the U.S.-based cannabis company names, which have turned out to be profitable, unlike, unfortunately, most of the Canadian names. Many of those are buys as well. We've traded those a bit. So those are sort of, just off the top of my head, some of the groups. Oh, and then I would also say defense, personal defense, Jim, the gun stocks. They had a bit of a correction here. Unfortunately, I'm a bit of a cynic about what our world is going to look like in the next few years, particularly after this election. So self-defense, gun stocks, Ruger, Sturm Ruger, Smith & Wesson, Axon, which does manufactures the taser. These companies, unfortunately will be benefiting as people need to protect themselves, unfortunately. So that's another industry you should be watching.
And your special offer again?
2020 half off when you go to vrtrader.com, 2020 half off, and you enter that at the promo code slot on the order page, and certainly appreciate you mentioning that. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.